Alright guys, so this is your end of the world report. Things they are exploding in the global economy. We have two big shocks from the US and China. Now Beijing is moving to defend their economy from a massive trade war come 2025. But the exact opposite is happening in the US. They are moving to destroy their own farming industry. Now we know Trump loves himself a good trade war. He wants to make the US into a tariff nation. But things are about to go off the rails. Trump has threatened John Deere with an unthinkable 200% tariff. If they dare to move production out to Mexico, he will punish their production and close off the US market. This is very bizarre. John Deere is a historic US company. They make a ton of farm equipment. The company itself, it's a cornerstone of the entire US farming industry. Over 60% of their revenue comes from American farmers. Demand is already collapsing and they are laying off hundreds of workers. And this might be the final blow to John Deere.
If you do that, we're putting a 200% tariff on everything that you want to sell into the United States, so that if I win, John Deere is going to be paying a 200%. They haven't started it yet. Maybe they haven't even made the final decision yet, but I think they have. John Deere is going to, and anybody else that does this, because it's hurting our farmers, it's hurting our manufacturing. And if you do that, you're going to have a 200% tariff put on the product that you make in Mexico, right across the border. They think they're going to make product cheaper in Mexico and then sell it in for the same prices they did before, make a lot of money by getting rid of our labor and our jobs. And
this is a serious threat. It won't just bury John Deere. The 200% tariff will backfire on, surprise, US farmers as well. Protectionism sounds great on the campaign trail. However, this will break supply chains in the US. The majority of farm equipment in the US are from domestic brands. Under the 301 tariff, cheap equipment from China isn't coming in. So if Trump hammers on John Deere, the farming industry will face a very big crisis. Farm production expenses in the US are at record highs. Fertilizer prices are up by 78%. Interest payments are also destroying US farmers. Repair, maintenance, and transportation are also up by around 20%. Their margins are already on thin ice. If Trump were to punish John Deere, the cost of buying and maintaining the equipment would fly up by 200%, and this will put a big squeeze on US farmers. There's a reason why John Deere has to move production all the way down south to Mexico. It's because manufacturing stuff in the US is just too expensive. Even the farmers can't afford machines from the company. Farming equipment makes up for a big percentage of total input costs. At least 16% of expenses comes from machinery. And this includes your tractors, trucks, and construction equipment, stuff that John Deere sells. Moving production back to the US will drive all these costs up. Farmers will be forced to jack prices higher, and this in turn will eventually trickle down to the US consumer. Food inflation will continue to stay high. The US is facing a horrific trade deficit in agriculture. In 2024, this will hit at least $32 billion. The US is importing more food than they export out, and it shouldn't come as a surprise. If your cost of production goes up, countries around the world simply won't buy from you. There's a ton of competition out there in the world, especially countries in Latin America. This chart shows us how the US is no longer a major food exporter. In 2011, the US recorded its biggest trade surplus of $44 billion. But from 2019, the entire situation has flipped. The US began importing more food and exporting less. This isn't good for national security, and it makes the trade deficit even worse. Trying to reshore manufacturing back home will backfire. The economics just don't make sense. If John Deere were forced to manufacture back in the US, so would other companies like Caterpillar. Trying to export food to other countries will be impossible. During his speech, Trump also gave China a warning. He wants Beijing to buy $50 billion in US farm products. He is going to call President Xi and instruct him to import produce. But here's the catch. That deal was made in exchange for the US to remove tariffs, and that didn't really happen. And with US food prices about to soar even higher, it definitely won't happen. China is all about making good economic deals. When they stockpile food or any other commodity, they look for the best price. Earlier this year, China cancelled a ton of US wheat shipments. In just a week, Beijing rejected 500,000 tons of wheat exports from the US. While it's true that the Chinese wants to reduce dependency on the G7, it probably has more to do with the price. When China buys anything from the US, they will have to settle transactions using the US dollar as well. They would rather buy from other countries like Argentina or Brazil and use their local currency, the RMB. With US prices going through the roof now, this just gives China a bigger excuse to cancel even more imports. They would rather buy from countries in the BRICS bloc. And this is one perfect example of unintended consequences. This will lead to higher prices in the US and an even bigger trade deficit. While the US is in trouble, China has unleashed a massive stimulus tsunami. It's all over the headlines. This is a bombshell update, and if you're in the markets, you kind of know what I mean. Within a single day, the entire Chinese stock market climbed by over 4%. This is the world's second largest economy, and it tells you how massive this rescue package really is. Literally everything is in the green. So let's go through this. What is happening? And is this even sustainable for the Chinese economy? Firstly, there are two parts to this plan, helping to shore up the Chinese property market and support the stock market as well. The PBOC has announced they would drop their repo rate from 1.7% down to 1.5%. China is telling their banks to go out there and lend money. By dropping the repo rate, they are making it less lucrative for banks to hide in safe instruments like government bonds. And this will unleash an incredible 1 trillion yuan in liquidity, or around $140 billion. The objective here is of course to give the Chinese economy a jumpstart and put a floor on property prices that are collapsing. In China, 60 to 70% of household wealth is in real estate, so psychology is at play here. If prices keep falling down, you'll feel poorer, and if you don't own a home yet, you'll just wait for prices to fall even further, and that perpetuates a vicious cycle of underconsumption. Make no mistake, this is a property bailout of sorts. They have fired the bazooka to boost domestic consumption. The PBOC is reducing the minimum down payment for second home buyers from 25% down to 15%. So this will entice the rich to buy up property again. It gets even bigger. The central bank will cover 100% of loans for local governments to buy unsold homes. This is essentially free money for the cities to absorb excess supply. If there's a bottom to the Chinese property collapse, this might be it or close to it. President Xi, I guess he really wants to hit his 5% growth target. And to accomplish that, you will need to restore confidence in the property sector. This brings us to a very important question. Why now? Why unleash the stimulus and not wait for organic recovery? Maybe it has something to do with this.
And if there is something that should worry all of us, I think it's not that China is showing more belligerence in East Asia, though that certainly should worry us. It's not that China is sort of expanding its scope into South America, into Africa as part of the Belt and Road Initiative, though, again, I do think that should worry us. It's that China, based and because of the stupidity of Washington leaders over the past generation, is now arguably the most powerful industrial economy in the world. Okay, if we're going to lose a war, it will be because we have allowed our primary rival to become arguably our most powerful industrial competitor. And God forbid, I worry that in 10 years, it will become obvious that China is not our primary industrial competitor, but that we're theirs, that they are now the preeminent industrial power in the world.
Now, JD Vance is right. China's industries are rising. They're already stronger than the US. But because of this, no matter who wins in November, a trade war is going to happen. If it's Trump, we'll see a 100% tariff on Beijing. If Kamala wins, she will continue to corner Chinese tech in semiconductors and EVs. Either way, China will be the big target in 2025. A big reason for this rescue is to start boosting domestic consumption, not tomorrow, not next year, but now. If Beijing faces a trade war, if exports get cut away, they will have to rely on local demand. The second part of the stimulus is really interesting now. The government is also moving to support the stock market by setting up a stabilization fund. At least $110 billion in firepower could be pumped into Chinese stocks. And let's focus on one key detail and you'll see how game-changing this move is. The Chinese government will allow brokerages, funds, and insurance companies to access a ton of liquidity. They can pledge their bonds, ETFs, and stocks for money. And once they get the money, they can only invest it in the stock market. And this sets up a very powerful loop that can send prices much higher. Valuations could start flying up once again. As a Chinese company, I can pledge my assets as collateral to borrow money to buy shares. I can borrow at less than 2% rates to buy stocks that pay a big dividend of 6 to 7%, like a state-owned bank, ICBC for example. It's one big carry trade for investors in China. It's so-called free money in a sense for them. Can this work long-term? We really don't know. It all depends on the Chinese consumption coming back to the fore. They have to make it work somehow because 2025 could be extremely nasty. In China, the focus is very much on real estate. 60% of household wealth is in property. Only 5% are invested in stocks. Beijing wants to change that to prevent another property bubble from forming. To compete with the US in technology, Beijing they need to boost their stock market as well. They need domestic investment from local people. If all the money flows to real estate and is trapped there, the real economy won't have the capital to grow. The higher the stock price, the more shares a company can issue to raise money. They can then use the funds for research and development. In the US, the situation is very different. According to the Federal Reserve, 41% of US household wealth, or their financial assets, are all in stocks, and that's 8 times more than Chinese money. This allows American companies to easily access capital to grow. It's a big reason why China is trying to prop up the stock market. It's important to realize that this isn't the end yet. In 2025, China faces a big trade war from the G7. We are already seeing the restrictions and the tariffs on EVs, and it's slowly creeping up to other exports like steel and even plastic. China has not thrown the kitchen sink yet, let's be clear about this. They still have ammunition left because a big decoupling is coming really soon. Beijing is currently under heavy tariffs, and by 2030, the share of US imported goods from China will drop down to 10%. This is under the current regime, and if things escalate under Trump, this number could fall to nearly zero by 2030 or even earlier. It will spike inflation in the US and cause damage to Chinese exports. So it's mutually assured economic destruction. So this big stimulus we see is probably just a preview and appetizer. If the US ramps up the economic war, China has to counter with even bigger financial support. China has unleashed the Kraken and there's more to come. The big bazooka hasn't been fired just yet, just wait until 2025. But let me know what you think. Is it all over for US farmers? And will China's big stimulus plan work? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.